Amy Rose Herrick, and I'm America's Profit Building Specialist. Today, we're going to spend a little bit of time, shouldn't take very long, I'm pretty sure maybe 15 minutes, and we're going to talk about buying equipment in order to save on taxes. Now, I know for many of you that just after you finish the end of the year, that's a common time, but you're not all on the same fiscal schedule. So there are many of you that your fiscal year ends at a different month in December. And so this can be an issue for you that shows up at later times. We're going to go ahead and do a quick screen share here so that we can go through, and we're going to talk a little bit about this. And as we go through, I always do a really quick disclosure. You want to talk to your own professional. These is general in nature, but I really want to start you working on that thought process and to make decisions that are going to build your bottom line quickly. Now, how does buying equipment decrease your income taxes? Well, most of you will hear someone will say after they're looking at the books, oh, you need to buy something in order to drop your income taxes. But I don't understand why so many of you are terrified of paying taxes on a profit. Depending upon the tax bracket you're in, it can make a huge difference on whether you should pick up that piece of equipment in this fiscal year, or if maybe you should wait a couple of months and pick it up in the next fiscal year when you're looking at some of your profit projections. A deduction will be worth more to you if your goal is tax savings, if you are in a higher tax bracket than the year you're in a lower one. So for example, let's take a $50,000 piece of equipment, and I'm going to assume you're using Section 125. You deduct it all in the first year. It's just an assumption. And if it's $50,000 and you're in a 10% bracket, we only saved $5,000 in taxes. But if your next fiscal year, you were going to be in a 20% bracket. I know it's a different number, but we're going to use round ones to make it easy. So if I waited a couple of months and I was going to be in a 20% bracket, now I have $10,000 in tax savings. I could double my tax savings if I waited a few months because it made the most sense for me. So these are part of the equation other than just automatically jumping. You need to know what's the real effect for you, because saving on taxes doesn't necessarily tell you if you're saving $1 or if you're saving much, much more than that in taxation. Now, why do you really want it? Do you really want this piece of equipment because you've been told you need to buy it so that you can avoid paying taxes on a profit? But I want you to look outside of that first, knee-jerk type of a reaction. Now, for some of you, you're going to have the regular cost, but then on top of that, you might have sales taxes. And I know in a jurisdiction I was in recently, it was just over 10% on sales taxes, which can definitely jack up the price of a piece of equipment. And then what about going forward? Sure, you're already looking at the list. Some of you live in jurisdictions where you have property taxes. Now, you may have to pay property taxes on it in addition to sales taxes for a period of years, or it may never go away. It all depends on your jurisdiction on how that works, but it's going to be an ongoing expense. Do you need to call your insurance agent to get it insured? What is that going to do? What about site cost preparation? What about the initial supplies you may need to run it? Do you have to pay to train employees? What about your annual maintenance cost? So anytime I have a client who is considering picking up a piece of equipment, then we need to take that beyond that discussion and then also have the mechanism to be able to go through in a few minutes using the workbook and the tools that I have in order to know the answer. Because if this is going to take money away from my bottom line, it's not the right decision. I'm looking for those things that will increase and build up my bottom line. And this is just one tool we can use. So I'm going to go back to where I'm hearing some of you say, but Amy, I was told that I could deduct it all in the first year. Let's go back to the importance of a tax bracket, or what's this really doing for you long term? If you paid $50,000 for it and we had this hypothetical 10% tax savings, well, it still cost you at least $45,000 if you paid for it in cash. We're not talking about the sales taxes. We're not talking about property tax. We're not talking about anything else. We're just talking about that piece of equipment that you bought. Or maybe you paid $50,000 for it, but you did it on a loan. Well, a loan has interest. You also are going to have the insurance cost. You have personal property taxes on it. What about your operating costs, space to house it, training? Is this a black hole that's going to suck money away from your bottom line, or is this going to be a cash cow and it's going to be like printing money by the acquisition? But these are all part of the equation that too many of you, by that knee-jerk reaction, oh, I'm going to save taxes, you're not looking any further up on the equation. Now let's stop and think. You're probably going to own this equipment for a longer period of time. You know, it may have a 5-year lifespan, a 10-year. I think a 20-year is difficult because over a 20-year lifespan, let's be realistic. Technology changes, production changes, what the public wants changes, the way we do business changes. And so you may have a piece of equipment, and when you're looking at the lifespan, in my examples, I'm using 10 years. In your example, the equipment may only be 5 years. It may be 10 years, it may be 20, but we have the flexibility, regardless to what you anticipate the lifespan of the equipment to be, to do some projections and see what this is really going to do for me on this particular deal. So when you're thinking about buying it, you know, it isn't just a 1-year deal unless you use it up in a year. And that's really very unusual on some of the larger equipment. Now, in that first year, when you've done the purchase, what you have done is you have made a long-term financial commitment, period, because it's not going to go away until you either give it away, sell it, or send it to the dump. Now, in that first year of purchase, you're going to see this again is a page that's out of the workbook that goes through, that walks you through some of the different things we've already talked about. But I want you to focus down here on the bottom line where I'm going to put my cursor real quick. Now, down here at the bottom line, you'll notice that I put, you know, tax brackets and savings. Well, you need to talk to your tax preparer about some of this, because depending upon where you are on the tax chart, many of you don't understand that taxes are graduated. You may pay no tax up to a certain number, and then you pay a 10% tax between this number and this number. And then when you're over a number between this number and this number, maybe you pay 22, and here to here you pay 37. In some cases, you will be straddling 2 different tax brackets depending upon where you are on your profitability and whether you are able to expense this out all in 1 year, or if looking at what your tax projections are going to be, if you are better off to stage it and depreciate it over a period of years. For example, if I'm in a lower tax bracket now, but my income continues to go up, I may not want to depreciate it all this year so that I can have some of that in later years as my tax liability continues to increase. And you don't always notice the difference between like a 10 and 12. You notice the difference between 12 and 22. So that's why we need to know what type of savings do you have on this type of a deal. And we've got to look way beyond that first buy equipment to save taxes this year. So we've got to take it further than that. Now, I've skipped some of the sections, of course, but in the workbook and going through, it's very specific. We're in just a few minutes. This doesn't have to take forever, folks. We can go through and project based on the lifespan of that particular purchase, whether this is going to increase my bottom line, or if this is going to be a black hole that I am putting some of my resources into. And when I look at a much bigger equation, outside of just I'll save taxes this year, that this indeed is going to be a purchase that I know is going to build my bottom line, and I'll even be able to project how much it will build my bottom line. Because even if I add this piece of equipment, I'm going to have to deal with that deals with pricing. I've got employee costs. That's another kind of a segment. But there is much more involved in what I see than just a knee jerk of buy it and save a little bit of taxes that we have this year. The other thing you'll notice is clear down here at the bottom where I put decision time, buy the asset, do not buy the asset. And this is something that the owner can do. Of course, you've got to get a little bit of tax data, a little stuff, or you could hand this off to some of your staff and have them walk through the process and then bring you the result. So the whole goal here is to save you time, but importantly, it's to either save you money or know that it's going to make you money, which is entirely different. Now, I want you to look at your watch. How long did that take? So in many cases, we can have a substantial difference on the bottom line, but it doesn't take hours and hours in order to find the answer and to be able to move forward with a very solid decision that you've got great confidence with. Now, if you have enjoyed this quick little snippet and you got something out of it, then I'm going to ask you to please subscribe to my channel, share it with someone else. There's going to be quite a few videos and things that will be coming up over the coming months where I'm going to try and take different business topics. And then I also have a different series that is for individuals to help you build your bottom line or to retain more wealth. Now, when I am doing those, you can look on my Facebook calendar, also on LinkedIn, and you'll see the upcoming events that I'm planning on putting up. Again, please remember to subscribe. If you look in the show notes, you'll have a way to get in touch with me. And for those who are on this live, then I'm going to be exiting and we'll do the Q&A. Thanks for joining us today. You have a blessed and a wonderful day. Thanks again.